Great. Hello, everyone. Good morning, good afternoon, good evening from wherever you have joined us for today. On behalf of AI Spot, I welcome you all for today's amazing topic of the webinar, which is themed around unleashing the digital revolution, transforming credit union with cutting-edge technologies. We are thrilled to have attendees from all over the world who have joined us for today. Now, to begin with, let me introduce myself and the company. My name is Arvind Kannan. I'll be your host for today's webinar. Joining me are Nitin Naveen, who's VP Innovation Strategy at AI Spot, and Akshana Nair and Naveen Kumar, who will be assisting in this webinar to keep it lively. In this webinar, we'll delve into the details of unleashing the digital revolution, focusing on transforming credit unions with cutting-edge technologies to enhance member satisfaction and drive innovation. Before we dive in, let me provide you a brief overview of AI Spot. We have been on a mission for over 3 years ago, and our aim is to be #1 AI-driven community all over the world. Our focus is to provide deep dive into sectors wherever the technology plays a crucial role. Every month, we are exploring different themes, bringing together like-minded people like yourself to share knowledge and drive growth. We aspire to be a one-stop shop for Industry 4.0 technologies, and will continue to do industry-packed webinars and hybrid events. The knowledge repository will be made from the reliable data through industry thought leaders and subject matter experts. We'll enrich the digital content through videos, blog, podcast, and newsletter to shed the light on ever-evolving industry. To stay updated on upcoming webinars and resources, please visit our website, aicospot.io, and follow us on social media, which will keep you all updated on what we propose to offer in coming months. And special thanks to our community partners for today, which includes Michigan Credit Union, Agora Financial Technologies, Ref Federal Credit Union, and InfoVision for their invaluable support in making this webinar a huge success. We are thrilled to welcome the lineup of industry thought leaders who will delve into the transformative impact of cutting-edge technologies on credit union. The attendees can expect to gain valuable insights on how these innovations are revolutionizing the industry, enhancing member satisfaction, and drive operational efficiency. Further, if you have any questions, maybe you can type in the Q&A section, which is there in the bottom of the screen. Now, let me introduce our panel speakers one by one. We have Sherry Wu, who is the CTO of University of Michigan Credit Union. And the second speaker, we have Arkady Lapero, who is the CEO, founder of Agora Financial Technologies. The third speaker, we have Zach Stillman, who is the Chief Technology Officer at Ref Federal Credit Union. The last speaker, we have Yuvraj Mohan, who is AVP at BFI at InfoVision, and the moderator for the panel discussion. Before we start, a quick disclaimer I would like to put. The views shared by the speakers are the personal one, and it's not related to any organization which they represent. Now, let's hand it over the stage to Yuvraj to drive this panel discussion. Over to you, Yuvraj.
Thank you, Arvind. Good morning and good evening to the folks joining on the thing, and happy Friday to all of you. Like you all, I'm also equally excited to hear the point of views and industry experiences from speakers, especially from the credit union space. And, we've been hearing all these challenges across globally, very specific to the industry and very specific to the domain. I think that today the focus is going to be more into the credit union space, how the whole challenges and how the transformation is happening. So with that said, maybe I'll start with Arkady, with you first, to hear some of your perspectives on what are some of the tech challenges that the credit unions are facing today.
Hey everyone. Everybody has issues. I'm in New York, so I'm not talking about shrink. I'm talking about professional issues. So your credit union today, everybody is different. Everybody has different size, different history, different membership, different legacy platform. But overall, the issue today is not the same one than 20 years ago. Today, it's not about what rate you can provide. It's not about opening branches. There's two big issues. One, the big players like Chase, JP Morgan, they're going after your credit union. And they have a 17 billion IT budget, yearly one. Okay, not everything is about digital transformation, but a big chunk of that is about digital transformation. Second player that are coming after you are the fintech, which are well-funded. So there's a lot of issues of fintech, of what is called B2C fintech, but the big one like Chime, Square, Apple, or certain one which are targeting the kids like Greenlight, or the SMB like Ramp or Breaks or Expensify, they have budget, they have a digital, and they're coming after you. So what is your big issue if you're credit union? It's one, you rely on legacy platform. Two, it's if you're on a journey to do digital transformation, it's not an easy path. There's a resistance maybe from your members, implementation cost, talent acquisition, and key one is speed to market. There are much more. I can spend like an hour, 2 hours on that, but it's like life is not easy. There's a solution, and with Sherry and Zach, we're going to maybe to suggest few ways to manage and to drive through it.
Thanks, Zakari. I know, I think that's good to at least talk about some of the key challenges is really, at least you touched on it. Maybe I'll extend this to Sherry to hear more about, while we have these challenges, what Arkady just mentioned, but how these, tech challenges or technology per se is helping to support the business initiatives that is coming from the credit unions, because that is a key. When it is aligned with business objective, with the priority, with the timelines, I think that's some of the things which we wanted to hear from you, Sherry.
Yeah, sure. So like we talk about all the challenges, but there is also light to what we're doing. So especially as IT technology, we feel it's really important in the financial industry, credit union per se. We support every single business. Whatever their business initiatives are, IT are there helping them. So one example, we utilize the budget and resources effectively with what we have, and then try to do the best. So one example I can give, recently we as a credit union got opportunity to sponsor an event at a pretty big facility. We're the only vendor there, and we got this opportunity really short time, like within 1 week, and we need to get this up running. And we said, okay, it will be a great way to drive membership, as well as, if we can give the member a debit card on site so they can hold the debit card. That's a huge difference. But we never done something like this before. So we were able to get onto so set up the mini branch per se with the infrastructure, security, firewalls, everything. And on the day the event, right before the event, 1 day before, we realized, it's cashless event as well. So one of the game we play is playing a cash cube, and then the player can get the money, and then we cannot give the cash either. So we actually have to come up like, okay, how to load the money to the card that we just made for them. So in the end, it was great using what we had, just planning differently. That day, the event, 5 hours, we get the most number of joined us, and with a debit card on their hand. So it's a great example showing what a technology can do to support the business initiatives.
Thank you. And post-COVID, the whole dynamics also changed. Everyone, the human interaction, coming to the branches, the consumer side, a lot of motivation we had to do for them to come in. And while the tech banking picked up a lot online, everything is online from your desk, you can do it. I think that's well said, Sherry, like how the technology also plays a role to fast track some of these response time, which makes them motivated and to come to the branch whatever they're supposed to do, versus most of the features that they can handle online. I think with that said, probably maybe I'll go to Zach to take this conversation to the next level. While we understand the challenges, we understand what the technology, how it is helping to support some of the business initiatives. Zach, maybe you can take this to the next level of, what does AI means to this, right? Because AI, all over people are talking, especially Gen AI is picking up last at least close to 1 year. And, while it is nascent and while it is yet to be proven, what do you think, the whole thing is turning in credit union space, and how the digital transformation is also helping in the space, Zach?
Sure. Yeah. Thanks for having me on. I think the first thing you got to do is you got to define what AI means, because I think in a lot of ways, AI is becoming what the term cloud was 10 years ago. Everybody talks about it. All of your vendors say they've got AI. All of their stuff is AI driven, and it's machine learning and all of these things, and nobody really knows what that means. There's a buzzword that's out there that we're going to use a lot, and that's going to tend to drive sales, but it's not necessarily indicative of true AI. And I think this dovetails actually really well into what Arkady was talking about a few minutes ago, because anytime you talk about emerging technology in our industry, you have to consider the fact that our regulators are frankly not ready for it. It took the NCUA forever to approve being in the cloud, well after the cloud was mainstream and established. The NCUA does not know what to do about AI. They frankly have no idea. And so there's this disconnect between the pace of technology and where it's going and what our regulators will actively support us doing. And so I think you have to balance that when you're part of an institution. But AI has profound implications everywhere. I just think about it in terms of information security and data privacy. Like, what would it mean if all of a sudden passwords became completely obsolete because there's AI tools out there that render them such? There's a lot of those types of questions that I think we as an industry have to answer, because for a lot of our infrastructure and member-facing equipment, passwords are sort of the gateway. Whether or not we've got multi-factor, biometric, whatever, there's still a password that's there. And so if that doesn't exist anymore, there's a disconnect that we have to be able to reconcile. I actually think, though, that the more profound application of AI in this industry is not necessarily going to be in the automation, the robotic processes, all of those things. Those are all great. That's wonderful stuff. There's a lot of cool emerging technology out there. But I think it's entirely possible that 20 years from now, none of us will be hiring software engineers anymore. We'll be hiring prompt engineers that can get AI to write the code for you. And that's actually kind of troubling. I would opine, I guess, that AI is coming for white collar jobs way more than it's coming for blue collar jobs. And I think that's something that we all need to be aware of as we staff and prepare to strategize around what the availability of workers is going to be in the next couple of decades.
The change is inevitable. We are, giving that view, it's really good because the change is always happening. And thanks for that interesting mindset, right? How the whole workforce culture is going to change. The kind of work that the software engineer is doing today. Again, the other thing, well, we all do this. The technology enablement is a must, and upscaling is a must. Also, as a credit unions or any banks per se, the customer retention and bringing new customer base is always an ongoing challenge, right? And that's an opportunity as well. Maybe, Arkady, if you can share some of your views and perspectives, how fintech is really helping in this space, especially the embedded fintech, and also how it is helping to bring in the new revenue streams as well. You're on mute, Arkady.
Sorry,
Yeah.
I'm on mute. It's not that it's noisy, it's not, but it's like just to avoid any disturbance. So just to add on what Zach said, I totally agree with him. There's on AI, it's buzz. There was a lot of buzz, like crypto was a buzz, cloud was a buzz, but it's a good buzz. And but AI didn't start now. It started already like 2 decades ago. IBM was already doing a kind of chatbot or emailing with AI, but it didn't work very well at that time. Just to add, and before talking about embedded fintech. So for me, AI, there's a short term, mid-term, long term. I totally agree with Zach. On the long term, huge impact on software developers. On the short term, just to give one number, it's not a bank, it's a fintech, buy now, pay later, Klarna. They implemented AI on the chatbot. In 1 year, it replaced 700 staffers to do chat. And it brought, in terms of economy, it brought them $40 million revenue saving just by implementing a chatbot, which is huge. So now coming to embedded fintech. So your credit union, everybody in the financial world is looking for new revenues or increase the revenue. The question is like how? So before talking about credit union, I'm just going to give you a few examples which may be extreme for credit union, but it can give an idea about where they can make money, theoretically speaking. Chase last month or 2 months ago, they announced a new digital division unit. So they're going to sell data to marketers and generate cross-selling to their end users. And they create a new business unit for that. Revolut, which is one of the biggest digital banks in the world, 40 million customers, they did something similar. Another one, which is not in the US, but in Asia, they launched an event, a concert with a partnership with Taylor Swift. So now I'm going to focus on credit union, but just to get an idea, it's like today there's a lot of revenue stream which can come from any corner. Let's focus on credit union. So one definition of embedded fintech. Embedded fintech, it's to plug in a way or another product or features with through a partnership with fintech. So now focusing about certain products, for example, insurance product. Who would have thought several years ago that a credit union can sell insurance product? And I'm going to give one number. It's a recent survey. I'll be happy to share later on to you guys, and you can share with the attendees. 70% of Gen Z today, they want insurance product through their credit union. 70%. How can you sell insurance product? That will be another question later, I'm sure. But let's now focus about embedded fintech. So there's a huge set of products. Credit union can add digital wallet, lending platform, buy now pay later, personal finance management, SMB lending, personal lending. There's so many revenue streams. I'm not going to the extreme of Chase because you need to have a large customer base. But before talking about or thinking about conciergerie or things like that, there's products that they can sell right away and through partnership with fintech.
Yeah, and there is a question from Nitesh Sharma as well, specific to this topic of credit. And the question is, what are some of the areas where you see fintech making the most impact for the credit unions? And could you elaborate on why enhancing the member experience is crucial at this time and how organizations should approach it? Maybe between you, Sherry, all three can jump in. Who would want to do? Yeah, go ahead.
So I'm not a credit union. I'm a tech provider, mobile banking / middleware solution. But just to focus, it's like as I said, can a credit union compete with a Chase, which is opening branch everywhere now? And I'm not saying that Chase has a great customer experience, but they're improving. Honestly, they're not the best one, but they're improving. But I'm saying it's like your credit union leveraging your presence is great. Face-to-face with your members, it's great. But digital banking is the most important one, not just by enhancing relationship with the end users, but also to reduce your cost. If you have a member coming to your branch to reset the PIN code, no one is happy. If you're a member, if you can't reset your PIN code on your side, it's a basic what I'm just saying. I can extend the set of features, but just something super dummy. You lost your PIN, you want to reset your PIN, just enhance your member experience. Just very basic what I say. It can go very far. But again, I'm not a credit union. Zach and Sherry will have, I think, more substantial and interesting feedback on that topic.
Yeah, I can chime in a little bit. So yeah, so what we see the most utilized the fintech is in the member experience side, to how to improve a member experience, such as the chatbot. I will actually give example later, more details on how we partner with the fintech to utilize the chatbot in our contact center. It's doing really well. So that's one example. So anything to do with member experience, it's one huge area.
Yeah, I think I agree with that. I think I would abstract it a little bit, and I would say know your membership. The things that work in a credit union in San Francisco are very different than things that work where I am at in the Southeast. We have members in what I would consider a urban area in Charleston, and we have members in a very rural area in North Carolina. They have very different attitudes towards digital anything. And it's really important, I think, to know your demographic, know your membership, know what their preferences are, and then tailor your services to them. Because ultimately, that's where all of our revenue is going to come from as a credit union. It's not like we can go out like Chase can and raise their own capital, issue stock, etc. We have to operate on the funds that our members provide to us. So it's I think it's really important to tailor your digital offerings in conjunction with your traditional ones. Otherwise, I think you're going to end up isolating a segment of your population, unless you're lucky enough just to have all one demographic as your membership, and then you can do whatever you want.
I think that helps. I think that answers the question what Nitesh asked in all three angles about the member experience as well as how the organization should approach it. Now, with that said, maybe like Zach, if you can give few more maybe like some scenarios that what you think from how the digital transformation looks more like a traditional line of business, right? So maybe you can take a few examples and you can touch on it. Yeah.
Well, I think we've talked about a couple already. The emergence of AI-driven chatbots, I don't think that can actually be overstated. Arcadia made a great point about what Klarna was able to do with theirs. I know of another credit union up near Sherry's area of the country that has reported to me directly that they replaced 65 jobs with the deployment of their AI tool. And it's a chatbot internally. It's not even an external facing one. It's a knowledge base type of chatbot. It's doing the work of 65 people. In a credit union, that's pretty substantial. And I think, so you look at things like that, and then you look at how, where else can you leverage some of these tools that are out there? You can do avatars that are the face of your ITMs that are backed by AI. You can do conversational AI. You need to be really careful because I'm sure everybody at this point is familiar with the Air Canada scenario of where somebody got the chatbot to agree to free tickets in first class. Probably don't want to open it up that much, but we can be really careful about how we want to deploy those types of tools. And I mean, if we really want to go to the next level, there's a bank in Slovakia that has done hologram tellers that are backed by AI in their branches. It's kind of a cool idea. I don't know how feasible it is, but they did it, and it's pretty cool looking. So, I mean, I think as you tailor your traditional offerings, especially as you look at the contact center and as you look at your branches, those areas should reinforce your digital footprint and your digital mindset. And so when you walk into a branch, you should be encouraged to engage digitally, even if it's in that branch, scanning QR codes, using your phone, what have you. I think that's really important.
Okay, there is another question from Sean. The question is, can you explain how generative AI aids in identifying and preventing fraudulent transactions? Also, will Gen AI-based virtual assistants eventually replace the customer support agents? I think, Arcady, you touched something in the beginning, but again, I'll leave it to all three of you who would want to answer this. Yeah.
I think this will be a great insight, but Zach already answered part of it with a bank in Central Europe about the customer support agent. More or less, he already mentioned that. But high level, but there's always a trend in new technology to tell you that they're going to reduce cost. Yes, it's going to reduce, but it's like it has to be trained. So in the short term, is it going to help reduce fraudulent transaction? Right now, I think we're more in the training mode, and then maybe in 1 year, 2 years from now, it's going to expand. But it's right now, it's like I will be something like a in short term to be cautious, because this is very touchy about when it's about fraud, when it's about it's a big P&L. So the chart is less risky, but when it's about things that can impact right now the P&L, there's going to be a phase approached.
Yeah, I would agree with that. AI explaining how it prevents fraud. I don't know that we're actually there yet to the point where AI can prevent fraud. I think to answer the second part of the question, will generative AI-based virtual assistants eventually replace customer support agents? I think the answer to that at some level is yes. However, I will also dovetail into the next question in the QA, at least with my opinion, is what training and resources do we need to manage and utilize AI, cloud, and chatbot solutions? AI always needs three things, at least in its current formation. AI needs compute, which is relatively easy. That's the provider's problem. They'll put it up in their cloud. They have the compute. They bought the chips from NVIDIA, whatever. You need data to train on. And your results of your AI are only ever going to be as good as the data you provided. So what are the data sets you're using? What are the models that you're using? Who's creating those models for you? How verbose are they? How deep does it actually go? That's actually the biggest challenge, I think, right now, is figuring out what data to feed into an AI so that it can actually learn something. And then the third ingredient, and I think this is the critical one that most people don't really understand, is you actually need human capital to manage AI. Just like you need human capital to manage other humans, you need to manage your AI as well. Because if you don't, you run the risk of it being too familiar and giving away too much. I did a case study as a security exercise where I was able to convince a chatbot to give me a 0% loan for 30 years. Live in production. So that was kind of interesting. But you also want to make sure that it's not too restrictive so that people actually use the thing. You don't want it to be just formulaic responses. So for example, if I say, what are your rates? The question shouldn't be here's a link to the rate sheet. That shouldn't be the answer. The answer should be, what kind of loan are you looking for? How can I help you? Those sorts of conversational questions I think are really important. You're not going to get that without somebody actually managing the bot itself. And I think that what you're going to see is some of these jobs that AI quote unquote replaces are going to be repurposed in becoming AI management, if that makes sense. It's kind of the same thing that happens with any other disruptive technology. So, if you go back in history, the most disruptive technology of all time probably is a tractor. Because before that, we were farming by hand, and now we have a tractor, and a whole bunch of people aren't digging ditches anymore. But those people got jobs driving the tractor or fixing the tractor or sharpening the blades or making the stuff that goes on the tractor. There's other things that people are repurposed into as new emergent and disruptive technologies come in.
Exactly. There is another question from Alvaro. The question is, what training and resources are necessary for credit union staff to effectively manage and utilize AI, cloud, and chatbot solutions?
Yeah, I think Zach touched base a little bit, but I can add on a little bit more. So for us, we want to really train them team members. Be careful with using technology such as ChatGPT, right? Because ChatGPT public one, you definitely don't want them upload the data from what your company data to upload. So we need to be monitor that. You can utilize ChatGPT for simple like helping with your emails or marketing campaigns, but as long as there's no company data for that. So we are working on, most credit union have the policy regarding what they can do, the team members, what can do, cannot do. And then best way is to create your own, companies wide chatbot to answer questions internal using your own data. And this restricted versus go out, right? So we know like some universities already implement that for the students to use versus students using ChatGPT directly. So there's some management need to be done for that.
Thanks, Sherry. Also, I see a comment from, go ahead, Arkady.
One thing to add on that. So to Alvaro's question, it's like, what training and resources are necessary? Yes, it's necessary. The question is like the quantum of it, it's unknown. And the quantum of it cannot be the same for any credit union because it's different size, it's different product, it's different feature. One thing that I would suggest to credit union, it's, if I can say so, it's always look at the big players. So JP Morgan, they announced recently that every new hire in their wealth management division, okay, it's not the banking, but it gives an idea because it's going to expand. Every new hire will get training for AI. So that should be part of the HR department. The same way that there's a training on AML, on compliance and things like that. There should be, at least to start with, a training on AI. What's the content of it? JP Morgan didn't say that. I'm sure it's going to be very light, but there's a need to start from the bottom. What is AI? Because the customers will, at a certain point, all of them, they will use it. It's not something that irrational, what I'm saying, because today, I don't have a ratio, but there's a huge proportion of students which are even paying Copilot or ChatGPT for the training, for the lessons, and they're going to ask questions to ChatGPT about banking.
Thank you. Also, thanks, Alvaro. I do see that Alvaro had given a detailed explanation that AI can proactively enhance the cybersecurity by detecting the patterns and anomalies that suggest the potential threats. For example, AI-driven systems can identify the suspicious activities and automatically update the scripts that modify the behavior of intrusion detection system IDS and intrusion prevention system IPS, thereby strengthening the defense mechanisms in real time. So
Yeah,
that's the point. Yeah, go ahead.
I completely agree with that. I would bifurcate the difference between cybersecurity and intrusions versus fraudulent transactions, because those are different things to me. But I think that absolutely in real time, they can enhance your security posture. 100% they can do that.
Yep. With that said, let me switch the topic. Maybe Arkady, if you can talk about the niche product solution. What are these, and how they can help to monitor the market? Yeah.
So I'm going again to jump on what Zach said earlier. You cannot have the same product for all your customers or your members, which are not in the same location, not the same age, not the same professional categories on one side. Two, it's like if you're looking to generate new revenue streams, you need to provide new services. So are you going to increase your revenue again by opening branches? No. The easy way to increase revenue is to go by having niche product for your client. There are tons of niche products, but high level today, it's like the niche that are emerging right now. It's especially for Christian, it's the teen banking, because the membership age is above, I think, like 40 or 50% of a Christian is above 50 years old. So think about what's going to happen in 10 years. So you need to get prepared for this segment. On the other side, you have a leading player like Greenlight, which is taking over the teen banking. So that's a segment. The second segment, which is more short-term for revenue generating, it's the SMB banking. This is something that Sherry mentioned about small medium business. But think about new niche product or segment. For example, as I say, not the teen, but the aged people. If you're coming for a new products about wealth management or personal financial management for aged people, or for migrant for the first underbank, or something which is super niche. I'm not from a head of compliance, so I'm not into that. But for example, certain Christians are jumping into cannabis banking. So there's a lot of niche banking. So the question is like, how can you monitor the market overall? There are different ways to do it. First thing, like Zach said, ask your member. Ask your member, what do they need? What do they want? You can create a committee with members to receive the feedback. The second thing, which is very straightforward, it's like it's an analytic platform. So you can leverage data among your customers, your members, or you can check industry report or surveys and poll. There are different ways to do it. To say, how can you monitor? First thing, it's like, check your membership base. What do they do with the data? And ask them.
Thanks, Jack. Sorry, thanks, Arkady. Probably maybe like before I take the next question, maybe Sherry, if you can talk about some of these omni-channel experiences for the members, and then I also wanted to hear from Zach about the FIs on how to capture on the Gen Zs. Once we have this, then I can get into this. There's another question from an audience. Go ahead.
Okay, sure. So we know, right, for the members come to credit union, they have, we have multiple ways. So we're providing a different channel, and we can now say, oh, digital only, the branch is dead, things like that. We want to serve whatever channel they prefer, right? So like we talk about different generations, some prefer to go to branch, some prefer just only through talking, call contact center, or through texting. So we implemented texting, chatbot, all the more recently due to the need of a younger generation. So those are the new technology we bring in, and so we serve all different channels, and then to see what they prefer, and we actually mark on the system itself, so we know like how engage the particular channel, then that's the way they prefer, and then that's how you target them for the future engagement as well. So one example we did recently, we had a CD promotion, and then we noticed the member has some issues. They call in and say how to open this, right? There's some friction there, and we also have a appointment scheduler system, and we say, oh, what about changing the appointment schedule, adding the city promotion as option? So you can schedule appointment to asking how to open the city promo. So because you need to transfer money, right? Or if you're not member, you need to join member first before you transfer money. So all those things need to do. So we able to make this appointment schedule. They can pick which channel they want, whether call or video, or go to branch, or do a drive-through. So we prepare them ahead of time, so the member come, and then it's much quicker than otherwise if team members not prepared for them to come. So with that example, small change we did to see what you prefer to do, and we're here waiting for you when you come. And we have 42% appointments are for the CD promotion during this 5 weeks time, and then was one of the best promotion ever. Due to we listen what a member needs. So that just give another example of like how we listen to the members and serve them to where they want to be served at.
Thanks, Sherry. Yep, go ahead, Zach, on the Gen Zs.
Yeah, so I think when you talk about capturing Gen Z, I think there's a couple of things that you have to realize about Gen Z. And I mean, I'll say I'm a little bit biased because I have 2 Gen Z children, but Gen Z is not a market segment because for a lot of reasons. But there are quite a few things that you need to think about when you think about connecting with Gen Z. The first is, many times I think we look at a generation, we looked at millennials this way 10 years ago, as they are the next ones coming up, right? Well, that's well and good, and I agree with Arkadi's point that the average age of the credit union is going up. Having said that, Gen Z is not the people with money. They have very little disposable income at this point, and they're not going to be the ones that drive your deposit volumes up because they don't have any money. It's just that simple. So I think capturing them where they are requires a dual-pronged approach. You have to have the traditional branch network. You really do. And if you look at the data, like from some of the credit unions that don't have a traditional branch footprint, their average age is actually higher than those that do. Now, that's not necessarily conclusive. All I would say is people like to know that they can go to a branch if they want to. And the market studies that we've done at both this credit union and my previous one would seem to back that up. But the bigger thing, I think, is to realize the difference between digital immigrants, which is us, right? The Gen X and millennial generations we came into this digital ecosystem. Gen Z are digital natives. They want everything instantly because they've always had everything instantly. It's a consumer expectation that is driven by Netflix and Uber and Amazon and social media. It's not something that is necessarily foreign to them, right? All of us think about it as this idea of, well, I'm going to get onto Instagram, I'm going to go tweet something, I'm going to go buy something on Amazon. For them, that's just normal. Like that is the way to do commerce. Having said that, they also want the assuredness of going into a building and knowing that there's a human being there that can actually solve their problems. So you have to take this approach. And I think that the institutions that can do this successfully have both a very, very strong digital presence, and it's kind of like what I said before, they have a branch network and a physical presence that reinforces their digital mindset. And so when somebody goes into a branch, they see and they interact digitally, even if they're still dealing with a person. I think that's a really important way to capture that particular audience.
Exactly. The question from Alvaro again, the NCUA facilitates connections between credit unions to enhance coverage and support for end users, relying on shared technology. How are AI and chatbots being used to connect credit unions across the US and improve the member services? Anyone can jump on this, like Shelly or
Yeah, so this will rely on open banking. So the credit unions members, they need the opt-in for their data to be shared. So right now that is still really limited. My understanding is Europe and Asia is much more advanced in that space than US. I know there's companies out there, fintech, start to get into this space to able to opt in from different financial industries, institution, banks, or credit unions. Then member can leverage that information to be served backwards after they opt in to be shared, to be use their data. Then they can share. So I think my understanding right now that's still limited due to the regulation in US.
Yeah, I would just say I have no idea how that's happening. I think it's cool. I think it's a cool idea, but I don't know how, like, if there's some sort of consortium of credit unions combined on a chatbot somewhere. So sounds like a cool idea. Somebody should do that.
Yep. Now, maybe Arkady, if you can talk about what management should they put in place for change management, and or who should sponsor the innovation?
Yeah, sorry. Change management is always complicated in a traditional life. Change management in innovation, it's even more complicated, because if something goes wrong, everything goes wrong, because we're talking about members which are going to be affected. In today's world, it has to come from the top management. The CEO, the CO, the CTO, the head of product, the head of marketing has to be involved. On the opposite side, every employee in a certain way should be involved, because I'm not talking about the big credit union, $50 billion asset or above 10 billion. It's like they have a resource, but let's talk about a credit union which is 200 million to $1 billion. It's like every change in innovation impacts everyone. So in terms of organization management, so the top management has to provide the guidelines, the direction. I would suggest that the champion of innovation for each separate project should be identified, because he will be the stakeholder. Include also, again, the members. So if you can create a panel of members to involve them in any change, because they will provide the right feedback and they will test. And before any release, mass release of innovation, which is facing the end users, to do a soft launch or beta test launch. That's what I would suggest.
Thanks, Arkady. I'm just keeping an eye on the time as well as on the Q&A. So, Zach, maybe let's spend some time on how do you measure the effectiveness of the information security program? I know it's a little broader topic, but you can go with some of the specific examples that you want to talk about.
I mean, measuring the effectiveness of the program ultimately for me comes down to two things. One is you've got to track all of your findings. You've got to have a cool tool that's out there that can combine it. Like we use Jira, for example. It's super easy to use, but that's a place where all of your exams findings go, all of your audit findings, all of your pen test findings, all of those things end up in there. And then you also track the remediation of those findings across time. And so what you're able to show is that your security posture in general should go from a risk level of X to X minus Y, whatever that is. That process should also decrease the time to remediate because presumably you're getting better at remediating threats as they come in. There's some presumptions there. You have to fully understand your threat environment. You have to understand what frameworks you're using. There's a lot of things that go into that. But I think tracking findings theoretically should be a good way of measuring effectiveness. Presumably, you should have less findings over time if you build a good program, right? If you end up having a program and you end up having more findings year over year, your program probably isn't working correctly. So there's a way that you can measure the effectiveness practically in that sense. I think another way, and this is actually something I learned that Chase does and Wells does, is they measure their security spend as a percentage of total assets. Which is kind of an interesting idea if you think about it, because every one of us at a credit union can do that and give ourselves an idea of where we benchmark against the players with $17 billion IT budgets, right? Because none of us probably have that. That being said, if we measure our spend against what they're doing, we can come up with a number that is roughly analogous. And it's going to be a small percentage, probably 1/100% for the most part. But the reality of it is that's actually a really good indicator as to how our protection profile and our program measures up against some of the players that are out there in the industry. So that's what I do. Seems to work. I'm sure there are a bunch of other good ideas too.
And definitely that helps actually. Some of the key points that what you mentioned helps. And again, offline, we can take it more topics depending on the interest from the participants. In interest of time, maybe I'll quickly go with Sherry. You can quickly touch on some of the data-driven insights, especially on personalization and decision-making, followed by Arkady, if you can, if you still see that there are some technology options there out, you can touch on that as well. Yeah. Sherry,
Okay.
go ahead.
Yeah, sure. So we, as a financial institution, we own lots of data. We actually, have lots of data. How we utilize them, effectively using them, that's the biggest thing. So, core member data, the ATM data, all the different data, right? How we draw conclusion using the data we already have, and to serve the member better, or utilize to targeting member for the product we want to sell into them. It's something they wanted, right? We want to predict what's the next best product for the member. And so using master data technology to gather all the data together, ideally you are able to understand the member journey from the time he become a member to whenever he receive email, click your link to a particular promotion, understand where he opened this account or buy this product online or in branch, and what other product he read this email about auto promotion, but he may did something else, to know what he did, and then predict what he want to do next, even though he did not apply, but saying, oh, he owned an auto car, it's 5 years old, he bought this car from, purchased the auto loan from you or from somebody else, if you know that. And so it's data is really a critical part of what we do and how we leverage data to serve the member better, but not for them to feel like target too much, like, oh, I read the email, you know me. So it's how we carefully doing that to understand. Remember, that's really critical, one aspect of us technology in the credit union or financial industry.
Thanks, Sherry. Terry?
Yeah, sorry.
So I know we have 10 minutes left, and I do see a question from a participant. Before I take the question, I'll take one last point of view from Caddy, and Zach, feel free to add to it as well if you can. What are some of the technology options still there out? Maybe Caddy, if you can go a little specific to it.
Yeah. So it will be less than 10 minutes, few minutes. So regarding the level of technology, I will use a word that Zach used at the beginning, which is buzz. Today, most of the Equation are working with legacy core banking provider. You know the name FIS, Jack Henry, FIS, and others. They're working on premise, either the creation level or at the core banking platform. And they're written in a code which is like 40 years and plus. So the buzzword was cloud-based banking. The second buzzword was API, which is a network of connectivity between one provider to another provider. What is needed today for a credit union, as we say, to stay competitive, it's like to be able, like, one, to deploy, to identify the niche product for the members, two, to eventually integrate third-party providers like fintech, or three, eventually to buy themselves to build new products. Cloud-based banking is not going to solve that. API is not going to solve that. What is needed today, and there's a new technology for that, it's called a microservices design. Basically, it's like, think about like you slice every features, and it allows you to build or to unbundle or to rebundle or to integrate third-party providers like a Lego box. This is a platform that we built at Agora. It's a next generation banking platform, and just think about the Lego box. So cloud-based is great, API is great, but today's world, they're missing a key component, which is this kind of technology, this kind of architecture.
Thanks, Arkady. Unless Zach, you wanted to add, if not, I can go for one last question on this topic. So this is from Alvaro again. In the highly competitive fields of AI and chatbots, there are numerous providers to choose from. How do you select your providers given the rapid changes in technology and the possibility that a leading competitor today might fail tomorrow? I think that's a great question from Alvaro. Yeah, go ahead, Sherry, Zach, whoever wants to jump in. Yeah,
I'll jump on it first, I guess. I think the first thing you look at is, and this is really true for selecting any vendor, is what is your vendor due diligence process? What do you have in place internally? What are you reviewing? Are you reviewing their financials as part of the agreement that you're going to sign with them? Are you looking at their SOC reports? Are you looking at how they handle data? Are you looking at their ownership? Is there concentration risk? There's quite a few things to go look at. But at the end of the day, we're in a risk business. All of us in the credit union land live in a risk business because we lend money to people and we have to effectively take their word for it. They're going to give it back to us. So it's, I think, important to vet vendors well. I think as far as practical steps to going and looking at what's out there, you are either one of two things in this industry as it comes to technology selection. You are either a leading edge adopter, which is a great way to pay too much for something, and either that or you are a follower. And it's okay to be a follower. The question is, how quickly do you follow? So you look at what other people have done. So, for example, we're a smaller credit union. We're going to look at what somebody larger has done. We're going to see what was successful for them. We're going to talk to those vendors. We're going to go to the trade shows. We're going to go talk to people who integrate with our core, because that could eliminate people right there, right? Integrations are the key. And anybody who's ever done a core conversion knows that's where the actual work happens, is doing all the integrations. Those are big deals, right? What's your integration with digital banking? Well, that depends on what your digital banking platform is. So I think there's quite a few things that help you narrow it down. And then at some level, you kind of just got to pick one, and you got to say, this is who we're hitching our wagon to. We're going to go with it, and be okay with assuming that level of risk. Something I say a lot to my team is we reserve the right to be smarter tomorrow, and that's okay.
Yeah,
Exactly.
I can just add a little bit from what Zach already discussed. So really similar process we go through, and the one thing is also look at their, because what you're saying, like a technology change, right? So when you evaluate the vendor, also look at their roadmap. If they're being around a little bit, they need to have a roadmap or robust, say what they plan to do in the next year or two, and we had issue with some of the vendors. I mean, hopefully they're say the truth, right? So that's the reference call, or look at what they have done and whether what they did or they promised on the roadmap. That helps. As long as you even have a year data, that helps you. We have an issue where we select a vendor that's years back, right? And then the vendor just sits still, doing nothing, no improvement. So that's one problem, right? You may be the leading player at that time, but if the vendors stop even innovate, start bringing new product, new enhancement, and they will behind quickly. So yeah, so we do need to look at their roadmap, what they do, and also like technology, where the people are, and then even their people look at LinkedIn profile, where the founders and other technology, where they come from. Also, another really something we don't look closely, but sometimes hurt us quickly, is the support. We all talk about implementation, launch the product, no problem. But support on a lot of time bite us really bad. If they have really bad support model, and you have a defect or you have a new feature you want to improve, but they are so slow in the bring those in to fix if there's issue. So certain things like due diligence, all those things. Besides, there's other things. So after you launch, what's they are doing to support you, and then what they're going to do in the next few years. So the roadmap definitely helps. That would be one more thing to add.
That's a really, really good point, Sherry.
Yeah. And I know we are very close to the top of the hour. Yeah, go ahead, Arkady.
Something not related to that, but it's a live news that just fell, and it's related to AI. It's funny because it's not related to the US. It's outside the US. It's Europe, but it's about Apple. Apple was looking to roll out AI tech, bunch of new technology AI on end users, and they won't do it now. They're pushing it back. So it's like when it's about AI that is impacting end users, data on end users, which are the direct impact and direct relationship with users. That's why I said earlier, it's like it's going to be phases. It's like back office testing, and don't expect that there's going to be a rush. And especially, as Zach mentioned, that credit union organization, they kind of slow on the cloud. There will be some time around AI. So it's like it's a news on Bloomberg right now. It feels like 2 minutes ago.
Thanks, Arkady. And with that said, I think thanks for sharing, all of you. You're investing your time and sharing all of your point of views. That is very helpful. And we also had some good questions from the audiences. And if any follow-up questions arises, what we'll do is we'll send it to you guys offline, so that we'll make sure that the responses goes back to those audiences. With that said, thank you all. And over to you, Arvind.
Yeah, great. Thank you, Raj, for being a great moderator, and big thanks to Sherry, Arkady, and Zach for sharing their valuable insights and making this session so informative. So I hope the audience have gained valuable insights from this topic. So I'll quickly wrap up the session. I would like to thank our community partners, speakers, attendees for enriching knowledge through this forum. Our panel speakers have shared insightful thoughts, making this webinar a valuable experience. Today's webinar was broadcasted live in our YouTube channel, and the recording will be available for your reference shortly. Also, please visit our website, aiCodeSpot.io, and follow our social media handles for updates on upcoming knowledge sharing session that will expand your horizon. Also, we would like to extend a sincere thanks to our knowledge and innovation partner, Information and Technology partner, Digit7, for making this webinar a huge success. To learn more about them, work in technological advancement, please visit their website at infovision.com. Thank you, all of us, for joining us today. Have a great day and have a great weekend ahead.
Thank you all.
Thanks, everyone.
Thank you.